we are increasingly getting towards a finale next year, I think. And uh, just yesterday, the US added another $15 billion of debt.
Okay. Eventually, all those steps, what will happen to US if they continue to be like this? Means that the economic collapse, or what will happen to
Uh,
the US dollars? Because there are a lot of people that are parking their money in USD now in the bank because the
yeah,
interest is good.
yeah. I think there are a few things that nothing good lasts forever lah. Secondly, the US debt keep on escalating, and there are a number of the auctions have actually been very disappointing. So that means that the banks are saddled with the treasuries. So normally the banks are they have to auction the treasuries. So if let's say there are no buyers, then the banks have been are saddled with the treasury. Now the thing is, if let's say the banks are holding the treasuries, yeah, and if let's say the as the US become more indebted, uh, the US dollar could actually take a fall. And the more debt there is, the more higher yields investors would demand to hold US Treasury. So actually, the Fed is in the dilemma, I think. There are only either or. Either they continue to print money to save the US dollar, which means they go into massive QE, bring down the yields, okay, so that the US interest payment on debt is reduced. If they fail to do so, then of course they keep interest rate high, and then the economy will take a hit. Hi, Augustine.
Oh yeah, Chin also called in. I think Chin is a new member, maybe
Yeah,
2024 one. So
yeah,
far I think the response has been very good thanks to our our new members, and also most of our old members that are renewing also. So
yeah,
very thankful to them. Okay.
yeah.
Yeah. So anticipated, that means nothing good will last forever. That means all this, USD going very high, and also the good interest rate now. So it's
Yeah.
in another words, it's quite risky to park your money in the bank at the foreign exchange currency as USD now, right?
Not so fast, but like I say, the major event would be mid-March 2024. Because mid-March 2024, that's when there'll be no more borrowing for the banks to plug the hole in their balance sheet. This bank term funding program was actually initiated in March 2023, when four of the regional banks collapsed because of their deterioration in balance sheet, because the yield suddenly go up, and then the bonds that they hold as asset collapse.
Mm.
So their balance sheet were in trouble. So that's why the FDIC and the Fed came up with this uh, bank bank term funding program, but it will expire in mid 2024. So already this program, the funding program, is being rolled over and has reached a record high almost on a weekly basis. So that means that the banks have still not cleaned up their balance sheet. They just keep on rolling over the uh, the the loan, so that they continue to plug their balance sheet. So
Mm.
what happened is that why the stock market actually went up, the the bank term funding program is another version of soft QE. So because when they borrow the money, their balance sheet looks better, and then the banks leverage on their assets again, okay? Uh, so that they have new money, so they leverage again, and then it snowball into the stock market.
Mm.
So it's basically, that's why you see that the stock market continue to go up. And the other thing is that the stock market went up because the government is spending like a drunken sailor. Okay, keep on incurring a lot of debt, and hiring of government servants increase, a lot of funding for government, like defense and all those. So uh, these are the factors that is driving the S&P higher.
Mm.
Um,
Okay.
and anything that is run purely on debt normally won't last.
Okay. Yeah. Maybe there should be, I will try to calculate the energy and see whether I can see anything in 2024 or not also. Yes.
Yeah.
Yeah, exactly what
So
happened.
yeah. So but today our topic, we are on the geopolitics side. We will actually have some in-depth discussion with what's happening in the gold market. I'm
Mm-hmm.
sure we have a number of members that are
Concern.
physical gold buyers. So
Yes.
there are some interesting news which I
Mm.
think would actually create an environment which will be beneficial to the gold market
Yeah.
in the future. Yeah.
Yeah. Okay. Okay. Um,
So yeah, it's already 8:31. Shall we
maybe we
begin?
can start. Yes. Okay. So,
Yeah, we have a newcomer, Yu Qing Yi. Uh, Welcome on board, Qing Yi.
yeah. In fact, I see a few new names also. Very glad that have reached you guys as well. Yeah. Let me just share screen. Once you can see my screen, let me know, and then we can go ahead and start for today's session. Good evening, everyone. Thanks for calling in. Today is already November 30th, which is the last day of November. Okay. And we are going to do the month of December's forecast. Actually, by right, the Chinese calendar, the December month starts on the 5th of December. Okay. We are using the solar calendar to calculate. So this month on December's forecast, the theme is stagnant reception. So we will see what is the meaning of stagnant reception later on. Okay. As usual, our talk agenda will start with the introduction, which I did just now, the disclaimer, and then the brief recap of last month's forecast, and then the influence elements for December 2023, and then also PC's forecast on December 2023 from the geopolitical financial forecast. And then we will sum up today's talk, and we will leave the session for Q&A as well. Anyone who joins in tonight, okay? So the disclaimer is the content here is purely based on our study in the global trends in relation to the 5 elements in Chinese astrology. I have already explained how the 5 elements Chinese astrology can be used to forecasting on the global trends. It's for you to use as a guideline in your investment decision, and we layer it with the global trend research from BC as well. As usual, please exercise caution in the investment, especially in such volatile situation. Something that is good might not last forever in this kind of environment. So do your own research on your company that you wanted to invest. And we will not give any stock advice here because we are not financial professional. Okay. Let's do a little bit of recap on what we have talked about in November. So November, the chart itself has a lot of water. Okay. The month pillar is actually a water pig, so-called water pig. The pig animal is actually the representation of yin water, kui water. So this is also November is also another pure November pillar of pure element of water. Okay, and the hexagram we have talked about was breaking apart. So we look into it that there's breakthrough. There should be breakthrough in technology with the water and the fire clash, and also related to weather And there are also, because of the fire and water clash, there are even more unrest in different parts of the world, as we can see from the headline here. And also the things that are breaking apart with only one yang line that's holding all this yin line of this hexagram of breaking apart. Okay, we can see that the military unrest, these are all the pockets of other regions besides the Israel and also the Ukraine war. There are China, Myanmar, and also Africa that is also having a lot of unrest as well. Okay, and in terms of weather condition, it has gone havoc because of the water that is present itself, that is represented by the cyclones and also the hurricanes in different regions, as we can see here. In fact, it was forecasted that there's 6 tropical cyclones spin across the globe at the same time. I think this is really a big headline because we seldom have this kind of phenomena, although we have hurricanes and cyclones, but not in these large scales. Okay. And also in terms of technology, we have also, breakthrough more in solar cells, in also battery, that people are looking for better materials, better breakthroughs in the materials in the battery and also in the solar cells. And also, I think there are some kind of a boost in AI innovation by Microsoft as well that was in November. So, this is all the headlines that we have. And then in the month of December, let's go through the energy for the month of December. Month of December, we can see that the water and fire clash is still strong. Expected conflict. Here we have the water, but here we have wood that comes in. Wood actually represents innovation. If you look at this year's chart where the day pillar was a water, so water produced wood. So we can see the new innovation. We could possibly see a new innovation or a new breakthrough in the month of December. And then as forecasted, the stock market will be trending downward, but I wouldn't say that it will be like, a major collapse. We cannot see that, although it's stated that the economy is not doing well, the debts are mounting, but still the stock market will still continue to sort of trending down in a steady manner. But it will not be, a sudden black swan events that will happen. Okay. And then in month of December, hexagram number 2 is the hexagram for 甲子. Okay, 甲子 actually is also the first among the 60 甲子. For those that knows Chinese metaphysics, this is also actually the leader, the 甲子. Okay, so the hexagram itself is kun, which is earth. That means everything is stagnant. Earth, we know that it's not moving. It signifies non-movement, potential stagnation, especially in economy. Then it is also the time that where you can sow your seed to grow. Okay, because the soil is ready to grow the seed itself. And then I would advise that this could be, when we say sow the seed, it could be, a good time for you to also make some investment. Okay, in some of the potentially, good sectors. And besides that, because of the earth, it also it will overwhelmed by various external factor as well, because the earth itself has been stepped on. So it is exposed. That means it's also subjected to various external factor as well. Same as the economy that we will anticipate in month of December. Okay. Yeah. So let's go through what exactly happened from PC side in the global trends. Over to you, PC. Would you like to share your screen?
Just recap November, yeah. I think with the onset of the conflict between Hamas and Israel, we provided two possibilities of what could happen, several possibilities of what could happen if US intervened. But thankfully, there were no direct intervention, and we avoided a full-blown war with Lebanon, Syria, Iraq, and Iran, although there were skirmishes and occasional bombings, especially in Syria and in Iraq. Now, the oil price did not surge, and the ensuing oil-driven inflation expected did not happen. So on one hand, if let's say a wider conflict would actually cause the price of oil to surge, but I believe that people are also a bit sane and not insane not to push the conflict over to the edge. So in that sense, oil price was a bit tepid in November. There were no major surge, and it's still hovering around the 70 plus to 80 plus region. Now, the US stock market weathered through the conflict rather well, despite the mounting risk, driven by record inflow into the Magnificent Seven. Now, all the hedge funds are actually long Alphabet: Amazon, Apple, Meta, Microsoft, Nvidia, and Tesla. Okay, these are the Magnificent Seven stocks. But if you look at their PE ratio, it is close to being insane. Okay, especially Nvidia right now, there are a lot of people who have done a lot of investigation, and they found out that Nvidia started a lot of AI startups. And what happened with these startups is that these startups are owned by Nvidia, and Nvidia use these startups to buy their AI chips. So that is like cooking the books, okay? And gradually this is being exposed. And if let's say you follow some of the Twitter sphere, there's a lot of discussion right now about Nvidia, using their investment in AI startups and then using the AI startups, putting money in their AI startup, then that money in the AI startup is used to purchase their chips to boost the sales revenue. So Nvidia is one that you should watch. And coincidentally, a lot of senior executives in Nvidia are already dumping the stocks. So this is again a signal. Now, this was how the Magnificent Seven performed versus the bottom 493 stocks of the S&P components. So the 7 largest stocks actually went up 29% as a share of the S&P total market cap. But on a return basis, they returned 71%, and the bottom 493 actually returned 6% only. Now, this is what we say that in such a rally, there is an absence of breath, which means that the rally did not bring, like people used to say, a rising tide raises all boats. But this rising tide is not raising the boats, okay? It is very focused in just continuously buying by hedge funds, drawing more retail investors into their funds, okay, to continue pushing the narrative that, these are the stocks to hold. But at some point in time, when there's no breath in the overall S&P, it becomes a crowded trade. And for anyone who does trading, being in a crowded trade is often very risky. Now, we also provided,
Yeah, I would like to say that actually, if you go back to the earlier chart, earlier this year, we also forecasted that the trend will be down, right? January, February, that time, and then after that, we did not say that it will go down because it will sort of sustain, stabilize, and it's reflected as in our forecast as well in this trend, and also actually the S&P or even the stock market index actually is represented not by all the companies in the stock exchange, right? They are only represented by a sample size. Does the sample represent the real population? Then I would like to, would like to caution against that as well. Because besides as a Chinese astrology, I also study a lot of statistics. So the most important thing, the questions as a statistician that we always ask, does the sample represent the population? Okay, so I think this is what I want to caution our members.
Yeah, and I think the thing is that a lot of a lot of attention right now is being paid to Nvidia, and when you look at Nvidia, which based on its PE, okay, it needs to earn 28 years of similar earnings in order to qualify it with this kind of high PE. So that is why, and a lot of people are actually executives are actually selling Nvidia. So it is a point of caution, because one of the key thing is that when it becomes too crowded, there's always a danger that a plug might be pulled sometime. So the other thing is that we also provided scenarios of what could happen if the Fed makes another rate hike in November and the Fed chose to pause and the market also rallied because suddenly there's no pressure on higher interest rate, but the higher interest rate have already done its damage. Because if you go back to our presentation in the month of November, I've shown you a chart that the bankruptcies, the rolling 12-month bankruptcies in US have already gone up, okay? And of course, Zoltan Pozsar was very insistent that soon there will be a YCC or yield curve control, but so far it has not happened yet. Although, Zoltan Pozsar did not specifically specify it will happen in November, he did specify that it could happen in Q4, and we still have one more month to go. Now, we forecasted that Europe inflation could rise as a result of higher energy costs, but inflation has remained mild. So one of the primary reasons could be the shortfall in economic activities, as highlighted by the following retail sales and PMI for manufacturing. So that could mean that Europe economy is stagnating, okay? That it does not have that kind of consumption to continue to drive inflation in the economy. So that could indicate that Europe is not on a good trajectory where their economy is concerned. Now, we forecasted that China PMI manufacturing could actually hold above 50, but it actually fell slightly below 50, possibly due to lower exports amid a slowing global economy. So for those who actually saw our book preview, I actually laid it out that a lot of the, like in the US, UK, and Europe, they are all facing negative real retail sales, which means if we cost in the inflation, they are actually seeing negative growth in the real retail sales. So that could be the reason why exports are being impacted in China. And of course, any exports have a lot to do with manufacturing, especially in relation to a lot of consumer goods. Now, where we were right. Now, the dollarization did indeed intensify. Saudi Arabia and China have local currency swap totaling $7 billion US dollars, consisting of 50 billion renminbi and 20 billion Saudi Arabia rial. So it is aimed towards establishing a RMB denominated oil trade. We'll talk about this later in the geopolitics session. Now, US continues to increase its borrowing. US public debt to date is 33.8 trillion. And I saw latest feed right now is very close to 33.9 because the US Treasury sold more debt during the last few days and will likely hit 34 trillion by the end of the year. Now, November, Evelyn said that there is mentioned that there is some noticeable breakage. Now, the breakage may not necessarily mean that there's a there's a total crash in the stock market, but there are signs of breakage, which is very evident in the financial system. And chief among those is actually UBS, where the CEO says that a private buyer is preferred, is a private buyer preferred outcome in case of rescue. Now, the CEO wouldn't say such a thing if, let's say, there's nothing wrong with the company. Just because the UBS said so indicates that there is some innate problem with the bank. And why it says it prefer a private buyer? Because a lot of the transaction that, with a buyer, a private buyer can be avoided for disclosure, okay? And, if let's say the buyer is a public limited company, then both sides have to furnish the details. So that's why when it's stipulated that they wanted a private buyer, means that there are some innate problems that preferably can be swept under the carpet. Now, another thing is that there's a warning of financial contagion, as HSBC is told to brace for a catastrophic £6.3 billion hit. Okay, so these are already being featured in the banks, and just this month, Citibank actually lay off or have intention to lay off up to 7,000 employees, 300 of which are senior managers' position. And meanwhile, the BTFP, or the Bank Term Funding Program, saw the highest borrowing on record at 114.09 billion, and the program will end in mid-March 2024. So when the banks can no longer use this fund to plug their hole in the balance sheet, then a lot of the banks could see some huge problems. And the thing is that that funding program has went up from several tens of billion right now to 114 billion. And that means that a lot of the problems associated with the banks have not been resolved at all. Now, probably if mid-March, if let's say there are major event, okay, such that a lot of banks suddenly, urge the Fed to bail them out, then probably we will see another uplift in the stock market as the Fed goes full retard on massive QE. So that if let's say the Fed decides that they will not bail out, then probably we will see greater destruction in the economy. But knowing the banks, okay, which control the Fed, okay, for those of you who are unaware, the Federal Reserve is actually owned by several major banks. Chief among them is actually JP Morgan. So if the banks are in trouble, the Fed will not hesitate to bail them out, because that means that their major shareholder, could be also in trouble, and they need the major shareholder to survive. Okay, so credit card spending continue to rise even as delinquency rate increases. And recently, the Black Friday reported that there were a lot of improvement in the sales versus the same period last year. And what they found out is that a lot of people opted for the buy now, pay later program, which means they rack up more credit card debt in their purchases, which they will then either pay by installments and could pose a serious risk to a lot of those who are providing the credit facility, because the delinquency rate is actually moving up. And US bankruptcy filings continue to rise year on year, and the change is now higher than the COVID lockdown and en route to the peak reached in 2008. This was the peak in 2008. Already the bankruptcies are higher than the COVID-19 lockdown. So probably it will continue to age up as more companies are unable to survive in such a difficult financial situation, because banks borrowing have actually turned into negative. So that means that it's very difficult to borrow money from the bank, and even more important for companies that rely on debt or rely on credit to fund their operations, they could be in serious trouble. Now, there are more news of CBDC implementation out of Europe. There's a project, 12 billion by the Bank of International Settlement Innovation Hub in Switzerland, and which is exploring payer anonymity with central bank digital currencies. So you can see that there's steady progress towards CBDC as we predicted. Then more backing from EU Parliament for nuclear power. So nuclear power will become greater in demand because that is very important for the EU to achieve net carbon zero condition or environment sometime in the future. So for our members who have followed us throughout 2023, if you have bought some uranium ETFs or uranium stocks, I believe that you are quite well, okay, in level of profits, as many of the stocks have seen their prices increase between 50 to 100% over the 1 year basis. So EU manufacturing PMI continued to remain in contraction in November, and we were correct about that. According to Reuters in its publication on 24th November, the downturn in EU's business activity is in November but remained broad-based, suggesting the bloc's economy will contract again this quarter, Q4, as consumers continue to rein in spending. A survey showed, as predicted, the risk of recession continued to gather momentum. Anti-war movement spread across Europe and the world as demonstrators protest against the war crimes committed in Palestine. China's economy showed resilience as economic data improved markedly. Which we will discuss in the China section. So China's EV continued to soar according to SCMP in its publication on 20th November 2023. Export topped 2 billion for the first time in October. They were up 32.25% from the same month in 2022 and almost double the value of shipments in September this year. So China, despite its lingering doubts on its consumer goods export, but in terms of vehicles, it continued to be a primary exporter. China real estate remains sluggish as predicted, and China trade surplus remains strong, reaching 187 billion renminbi in October. So economic indicators for the US, CPI was unchanged month-on-month in October. Year-on-year, it grew 3.2%, down from 3.7% in October. So even the US, the CPI is gradually coming down. And a lot of it has to do with the changing of goalposts, okay? For those who have followed our book review, I think you would remember me saying that, some components have been altered in a sense that there is a 34% drop in insurance premium, for example. And that 34% drop in insurance premium, which is not supported by any facts, could result in actually higher inflation, okay? Then core CPI came in at 0.2% month-on-month in October. Year-on-year, it grew 4%, down from 4.1% in September. PPI came in at negative 0.5% month-on-month in October. Year-on-year, it gained 1.3%, down from 2.2% in August. Now, all this was also because of the sharp fall in the price of gasoline. Now, retail sales came in at negative 0.1% in October. Year-on-year, it gained 2.5%. Net retail sales less PI was 0.7% negative. Industrial production fell negative 0.6% month-on-month in October, and year-on-year, it fell negative 0.7%. So you can see that the economic indicators in the US is really not excellent, but the government continued to tout its strong economic growth, all of which were actually driven by debt. NAHB index came in at 34 in October, down from 40 in September. And that's actually a severe drop because you need to be in 50 region to be in expansion. Housing starts rose 1.1% month-on-month in September, while housing permits rose 1.9% month-on-month. Existing home sales plunged negative 4.1% month-on-month in September. Year-on-year, it fell 14.6%, lowest since 2010. PMI for manufacturing went into contraction to 49.4, while services remain in expansion at 50.8. So even the US is facing some contraction in manufacturing. Now, the Conference Board for leading economic indicators continue to decline, 0.8% negative month-on-month, and this is the 19th straight month-on-month decline in the LEI, the longest streak of decline since layman. 22 straight months of decline from June 2007 to April 2008. So right now, it's 22 months for layman, and right now it's 19 months, okay, in our current situation. Year-on-year, it fell 7.6%, but according to this chart, since it's not plunging anymore, there are suggestions that the LEI has bottomed, but we can never dismiss the fact that sentiment could turn for the worse, and therefore we can actually have another month of decline in the LEI. Now, the time bomb is actually in the BTFP. As I mentioned, it has already reached a new record high of 114.09 billion. Now, this shows that the banks are increasingly reliant on the program to plug the hole in their balance sheets. The BTFP will end in mid-March 2024, and it remains doubtful that the banks will be able to repay their borrowings in full. Especially one of the major stockbroker, Charles Schwab, okay, their liabilities is, I think, more than 100% their equity, something like that. So Charles Schwab is actually one candidate that can see some problems. So delinquency rate, you know, just now we mentioned about delinquency rate in credit card, and last month we talked about delinquency rate in auto loans. Right now, delinquency rate in housing is also spreading, and delinquency rate in multifamily housing is inching higher just as credit card delinquency rate rises. Meanwhile, household debt reached a new record high in Q3 of 2023. So this was the peak, okay, during the global financial crisis. So we are now at the highest level since the global financial crisis, but we have not moved up higher than this. So previously in November, we also talked that the problem with Airbnb, okay, could actually cause a massive sell-off in properties because of a lot of the owners are heavily indebted, and also more people are moving back into hotels rather than Airbnb. So what could happen in December? Now, the Magnificent Seven continues to be a crowded trade, while the bottom 493 component stock will see little breath. So I think there's still a lot of power moving into December, albeit that there could be some drawdowns because it is, you know, so many funds are actually into the Magnificent Seven stocks. So it has to take tremendous amount of negative news for the hedge funds to actually start selling, but they are prepared to push it to the highest that they can, and they keep on drawing new retail investors to invest in their respective funds targeted at the Magnificent Seven stocks. stress or cracks in the financial system will become more noticeable. The market may react unfavorably to any negative news. More layoffs from banks will be announced. I believe that to many banks, in fact, some of you might have received my alert this morning stating that US banks are actually in the hole for unrealized losses amounting to 685 billion. Now, the reason why the banks continue to, the banks reported beat in their earnings is because all these unrealized losses are not marked to market. If they were to mark to market, then I think a lot of the banks would have already gone under. US government's runaway debt binge will unsettle the bonds market as recent auctions have been poor. Continual unwinding of US treasuries by China could exacerbate the situation. China's holding of US treasuries fell to 778.1 billion in September from 805.4 billion in August. This trend will likely continue as China seeks to de-dollarize its reserves. The Fed will likely maintain the current interest rate in December FOMC for fear of further rate hikes could risk a blow up in the bond market and banks' balance sheets. So I think the Fed is very aware of this, no matter how hawkish they like to sound, because any further rate hike could damage a lot of banks' balance sheet irreparably. Weakness in the US economy will be more pronounced, with retail sales in October and contraction in PMI for manufacturing, for instance. Now, the estimate by the Atlanta Fed GDP now puts the growth at 2.1%, down from 4.9% in Q3. So even the Atlanta Fed is not that buoyant, okay, on the prospect of the Q4 GDP. The US GDP growth to date has been purely driven by new issuance of debt. So Europe economic indicators, German manufacturing PMI came in at 42.3 in November versus 40.8 in October, while services came in at 48.7 versus 48.2 a month ago. France manufacturing PMI came in at 42.6 in November versus 42.8 in October, while services PMI came in at 45.3 versus 45.2 a month ago. UK manufacturing PMI came in at 46.7 in October versus 44.8 in October. Okay. Sorry, this should be November. Okay, 46.7 in November versus 44.8 in November, while services came in at 50.5 versus 49.5 a month ago. Now you can see that the top three economy in Europe, most of them are actually in contraction, save for the UK manufacturing PMI. The contraction in the manufacturing sector signifies the deindustrialization in Europe is becoming a problem to the European economy. Germany's Q3 GDP fell negative 0.1% versus positive 0.1% in Q2. France Q3 GDP grew 0.1% versus 0.6% in Q2. So you can see that there is a markedly fall in their GDP. UK's Q3 GDP remained unchanged after a gain of 0.2% in Q2. So you can see that even the UK is showing signs of stagnation. Europe major economies remain weak, cannot rule out further weakening in Q4. Eurozone CPI came in at 2.9% year-on-year in October, down from 4.3% in September. UK CPI came in at 4.6% year-on-year in October, down from 6.7% in September. Eurozone retail sales were negative 2.9% year-on-year. And if we take into consideration the CPI, the real retail sales is down 5.8% year-on-year, whereas the UK, it is down 8.5% year-on-year after adjusting for inflation. Now, the current strength in the euro versus the US dollar has helped to reduce inflationary in Europe, because you can see over the 1 month period, the euro has gained against the US dollar. More US dollar required for 1 euro. At one time, it was pegged at $1. Right now, it's $1.10. So that means that the strength in the euro has, to some extent, lowered the inflation rate in Europe. So what could happen in December? Europe seems to be heading towards an economic catastrophe with falling manufacturing PMI, retail sales, and a failing GDP. Inflation has subsided, but will be difficult to taper down to 2% due to imbalances in global supply, and food inflation remain as the key item. Also, the rapid decline in the economy will prompt the ECB to react. However, any monetary easing will cause inflation to rebound because it will weaken the euro. Widespread demonstrations will prompt governments to control the masses, but this will backfire. You can see that a lot of demonstrators who are pro-Palestine in Europe, they are now being censored, and it's even regarded as a crime to support the Palestinians. So recent racial-driven unrest in Dublin will be duplicated elsewhere in Europe as government's narrative collapse and more citizens take things into their own hands. So what happened in Dublin was that there was a stabbing of 3 children, I think, by an Algerian, and that caused, the citizens to revolt, and they burned all those hotels or premises that were used to provide lodging for immigrants. So I think that because the entire Western Hemisphere is so tense, be it racial tension, anti-war, and such, that any small spark can actually erupt into a major event, and that could be dangerous for the economy.
This is also in line with period 9, when we say that there is a lot of instability. Even a small event could trigger something that, very big, like, fire event.
Yeah, in fact, in Dublin, they burned down a lot of the lodgings, for immigrants. So CPI for China was negative 0.2% year-on-year in October and down from unchanged in September. Now, when China has a CPI that is negative, there are a lot of negative news spinning that China is in a deflation, China is in a collapse. Now, deflation is something that when there is a collapse in demand, okay, and that brings about collapse in prices. Now, if let's say there's a collapse in demand, the retail sales in China must see significant drop into negative. Okay, so core CPI came in at 0.6% year-on-year in October and down from 0.8% in September. PPI came in at negative 2.6% year-on-year in October and down from negative 2.5% in September. So retail sales came in at 7.6% year-on-year in October, up from 6.8% in September. So again, this would have debunked the China's collapse theory, because retail sales actually rose. Deflation is when there's collapse in retail sales, collapse in demand, and collapse in manufacturing. So industrial output went up 4.6% in October, up from 4% in September. So industrial output also gained. Services sector also gained 7.7% year-on-year in October, up from 6.9% in September. China's fixed asset investment went up 2.9% year-on-year during the period from January to October, down from 3.1% during the period from January to September 2023. Now, fixed asset investment has a lot to do with the property sector, and you can see that this sector would be a thorn, okay, on the to the economy, and I think there will be a lot of adjustment being made in the coming months. China's survey urban unemployment rate stood at 5% in October, down from 5.3% in September. Now, a lot of people like to point out of the demographic collapse in China, in that a lot of young people are right now jobless. But actually, according to another report that I came about, number of young people enrollment into college actually shot up 60%. Okay, and on top of that, a lot of young people, they are not working full time. There's quite a lot of people who are actually key opinion leaders, and that's working on the streaming, okay, and on the gig economy. So the PMI for manufacturing sector came in at 49.4. This should be red. In November, while the PMI for non-manufacturing sector came in at 50.2. Now, the other thing that you need to look at when you want to gauge China's economy, okay, you just have to look at some of the other data. One of that is that China's international trade in goods and services totaled 4.09 trillion in October. And trade in goods came in at 1.96 trillion and imports hit 1.63 trillion, resulting in a trade in goods surplus of 326 billion renminbi. Services exports total 177 billion, while services imports hit 316.8 billion, resulting in a trade deficit of 139. Now, total trade surplus for goods and services amounted to 187.5 billion. So China still enjoy a steady trade surplus, although the trade surplus have fallen when compared to previous months. So China's contraction in manufacturing PMI could be driven by lesser exports to the US and EU, which saw falling consumption. Both have negative real retail sales. The other thing that you need to look at is the power consumption. Now, China's power usage in October climbed for 8.4% year-on-year to 741.9 billion kilowatt-hour in October. Power consumption by primary industries increased 12.2% year-on-year, while power consumption by secondary and tertiary sectors rose 8.6% and 14.4% respectively. Residential power usage saw a year-on-year decrease of 0.7% to 86.2 kilowatt-hour. Now, obviously, I do not think that residential power usage climbing very high is good for the economy, because they should be working, away from home, not at home consuming electricity. So sometimes it being in negative may not be a negative picture at all. In the first 10 months, the country's electricity consumption rose 5.8% from a year ago to 7.6 trillion kilowatt-hour. So you can see that it's very much close to its GDP, which rose 5.2%. So one of the key things is that the power consumption will often try to be parallel, okay, to the GDP, because only when you have economic activities will there be increase in power consumption. The other thing is actually government collection, revenue collection by the government. The central government collected 7.59 trillion in revenue, up 8.5% year-on-year, and local government saw increase of 9.1% to 9.08 trillion. Tax revenue totaled 13.91 trillion in first 9 months, up 11.9% year-on-year. And the thing is, if you go back to the US, the tax revenue actually fell, okay, at the same time that interest payment on debt has skyrocketed. So that means that the tax revenue is insufficient, okay, and it needs to issue even more debt to pay for its interest. And that is why the debt binge by the US will continue to go up. Now, the above figures could indicate that China total GDP for 2023 could be within reach of the IMF's target of 5.4%. Now, the other thing is China's heavy industries growth. China brand passenger car sales surged 22.2% year-on-year in the first 10 months in 2023 to nearly 11.43 million units. The market share of such vehicles hit 55.3% in the period. So right now, Chinese passenger brands, Chinese brand of passenger cars, already been the major component. So that means that earlier brands like those from Volkswagen, Mercedes-Benz, Audi, BMW, Toyota, Honda, they are seeing decline because their market share have been taken over by Chinese brands. Incidentally, Mitsubishi is considering to exit the Chinese market totally. Now, in October alone, about 1.49 million domestic brand passenger vehicles were sold in China, soaring 25.1% year-on-year. Now, these sales accounted for 59.7% of the country's total passenger vehicle sales. And then, where the overseas market is concerned, China shipped 488,000 vehicles overseas in October, up 44.2% year-on-year. China is certain to become the world's largest automobile exporter this year, as its auto exports in the first 10 months hit 3.9 million units. China also maintained its top position in global shipbuilding market in the first 10 months of 2023, with strong growth in both output and new orders, industry data showed. The country's shipbuilding output climbed 12% year-on-year to 34.56 million deadweight tons during the January to October period, accounting for 49.7% of the world's total. New orders surged 63.3% to 61 million deadweight tons, taking up 67% of the world's total during the period, and the volume of orders on hand for the industry stood at 133.82 million deadweight tons as of the end of October, up 28.1% from a year earlier and accounting for 54.4% of the world's total. So in terms of shipbuilding, China right now, okay, is a major player. In fact, it has overtaken South Korea as the major shipbuilder of the world. And if you are familiar with the SGX, there is a particular stock that is listed in Singapore that is in the shipbuilding business. And if we base on the current trajectory, it could be one of the major beneficiaries. So I think Singaporeans who are familiar with the SGX would know what that stock is. So there is continued weakness in China's real estate. More cities in China reported falling home prices in October. 56 or 70 large and medium-sized cities saw month-on-month drops in new home prices, up from 54 in September, while 67 registered price declines for second-hand homes compared to 65 in the previous month. In the four first-tier cities, Beijing, Shanghai, Guangzhou, and Shenzhen, prices of new homes edged down in October, and that of resold homes turned to drops from marginal increases. Home prices in 31 second-tier cities and 35 third-tier cities in general also went down in October from a month earlier. The number of cities that saw drops in new home prices was up from 45 to 47 in October, and those with lower prices for second-hand homes remained flat at 67. As things stand, the real estate market in China is still facing headwinds after policy changes failed to lift sentiment. It could also mean that the Chinese citizens are allocating more money into savings given the gloomy outlook in the global economy. So I believe that the real estate would still would be very sluggish, but I don't anticipate a major plunge like what happened in 2021 and 2022. It's just that there are less incentives for buyers to participate. But recently, in mid of November or third week of November, the Chinese government has made some adjustment in that they will allow distressed companies to raise debt if the intention is to complete their buildings.
Yeah, this is also in line with our book preview of the Wood Dragon Year of 2024, where we say that Earth is the biggest element in 2024. Definitely, there will be attention to the real estate, but I don't think it's because of the price going up, but maybe because of certain changes or certain trajectory that causes it to a lot of people will put their attention there, but it doesn't mean it will be the most profitable sector in 2024. Okay.
Yeah, in fact, I think the 2024 may be just a flash in the pan where real estate is concerned. There are some good news to spur some buying, but I think on the longer trajectory, I think if we go back to our 5-year forecast here, the real estate certainly will face a lot of challenges. So of course, amid the challenges, I think Evelyn and myself, we do anticipate there'll be little pops, okay, of green shoots, but then it will not last long, okay. So now, in terms of technology, earlier Evelyn mentioned some of the technology development in the US, so I will not repeat that. But I think more importantly is the technology advancement that is in China. For example, in our book, Unlock Your Wealth Potential, we already shared with you how China is controlling a lot of the latest technology that are important or will shape the destiny, okay, of the global technology drive in the coming years. So there was a slew of listed Chinese internet giants that have released reports on their financial performances in the third quarter of 2023, revealing robust growth momentum propped up by innovation drives and reflecting the solid recovery fundamentals of the Chinese economy. So the revenues and profits of China leading market players in the internet platform sector, including Alibaba, JD.com, Tencent, and Baidu, continued their robust momentum in the first half of the year to log fast growth in the third quarter. In fact, I think Alibaba is way oversold, in my opinion. Okay, not that I'm giving stock advice here, but Alibaba actually did quite well. There was a tremendous surge in earnings, but I think it was being drawn down by two major factors. Number one is that SoftBank, which actually is the major shareholder in Alibaba, was actively selling Alibaba to plug its gaping hole in its balance sheet. Okay, SoftBank actually has seen losses amounting to tens of billions of dollars, and its balance sheet was actually in distress. So that's why SoftBank was actively selling Alibaba to plug the hole in its balance sheet. And of course, the other thing was the purported postponement of the listing of Alibaba Cloud. So that has been negative news hitting the stock. But if you look at its PE ratio of Alibaba versus Amazon, Amazon is I think 70 plus, and Alibaba is still less than 20. So that's the great discrepancy between the two. Just comparison basis. Okay. Now the financial reports have also revealed that the enterprises have increased their investment in artificial intelligence, innovative services, and related areas, creating new businesses. Now, one of the few things that were revealed in November was that Xiaomi announced its Hyper OS. And Xiaomi actually saw a huge rise in its earnings. And also, its Hyper OS would connect its EV, which it is going to release around first half of 2024, to the home appliances. And then Oppo also announced its Color OS, and more chip developments to challenge existing giants like Samsung, Micron, and Nvidia. In fact, Huawei is fast. So after the Biden admin in late October come up with a list of banning of artificial intelligence chips to China. NVIDIA come out with a lower performing chips, okay, but then it doesn't attract buying from China because Huawei is actually selling something better for the Chinese enterprise. So that is why I think that gradually that's going to be a shift, and the Chinese technology sector will be more vibrant versus the US. So the other technology advancement is a lot of big breakthrough coming out of China. Now, in the field of quantum computing, a team of researchers from University of Science and Technology of China unveiled a quantum computer prototype called Jiuzhang that reportedly outperforms Google's Sycamore. According to the researchers, Jiuzhang completed a task in just over 3 minutes that would have taken Sycamore around 2.5 billion years to solve. So actually, in quantum computing, China is scaling up. And in fact, that China no longer published their supercomputer performance versus the US because they see that, shouting about certain performance of their exascale computer will only draw some further ban on chips and such. But quantum computing is a totally different field. Because they don't use the regular microchips, but rather, I think in China case, they use the photonic chips. Meanwhile, China continued to expand its battery and EV technological advantage with much improved advanced driver assistance system, or ADAS, and light detection and ranging sensing technology called LiDAR. So 48 projects with 160 billion funding are involved in the development of sodium-ion battery in China. So right now we are still very heavily into lithium or lithium phosphate. But I think, with the onset of sodium-ion battery in China, that could actually further transition the EVs, performance over the next few years. But I don't see the sodium-ion battery making any headway in the short term, but although the medium term, we could see more of these batteries entering into the market. So what could happen to China in December? Now, China's economy will likely remain strong in December, driven by domestic consumption, heavy industries, and technology sector. China's PMI manufacturing could be borderline between contraction and expansion, as heavy industries' sub-performance is offset by sluggish real estate and exports. So we will see periods of expansion and contraction, but very close differentiation in terms of the figure. For example, sub 50 to 49 to sub 50, and then slightly above 50 for expansion. Now, EVs export will continue to power ahead in December as the major producers expand their footprint aggressively overseas. Right now, Chinese EVs are very in demand in Latin America. They have made penetration into the Latin American market and very prevalent in the Southeast Asia market. China's heavy industry will continue to be robust. Okay, real estate will remain sluggish, buyers to remain on the sideline. China trade surplus will stay in positive territory, although the surpluses have shrunk compared to other months. Now, this is because of the drop in exports to Europe and the United States, especially where merchandise trade is concerned. Now, geopolitics. I think recent news, we need to have a deeper understanding of what is transpiring. Now, two news made the headlines, okay, and that we have China and Saudi Arabia, agreeing to a currency swap agreement. And just yesterday, UAE Central Bank renews 4.9 billion currency swap deal with China. Now, this allows both Saudi Arabia and the UAE to receive renminbi for the oil trade. The renminbi is convertible to gold at the SGE, and this provides a de facto gold backing to the renminbi, and thus a de facto oil trade backed by gold. So this is in connecting the dots. There is no specific statement by any parties that the oil trade will be done by gold. But if we understand the workings of the SGE, where renminbi can be convertible to gold at any time, then that provides a de facto backing. So the other thing is that gold premium in China continue to be above the price of the COMEX. On 27 November, the gold futures were trading at $2,043.48 per ounce in renminbi equivalent at the SGE at the close. And gold futures were trading at $2,012.97 per ounce at the COMEX at the close on 28 November. Now there was a $30.51 per ounce premium as the SGE when compared to the COMEX. At the same time, there were reports that China is buying unrefined gold and silver or doré bars directly from the miners. So because China put a premium on the price of gold, it means that China is offering a premium for the price of doré bars so that the miners would transact in renminbi, while at the same time corner the gold and silver market to starve the LBMA and COMEX of their gold and silver. Because now, if you are a mining company, I believe that most of this is done in Latin America and Africa, or even in Southeast Asia, rather than in the open with the US or Australia, which often supply to the COMEX. But the thing is that by giving a premium price, these companies will get renminbi, and then they can use the government. The government can actually buy, take the RMB and then use it, okay, for trade with China. So the miners get the RMB, but then they convert it to any other currency with the banks in the respective countries, and those banks would then hold renminbi, which they can then transact with China for goods, services, or infrastructure. Now, at the same time, Chinese banks have also been absent from the price setting at the LBMA. That means that China is no longer interested in being a member to set the price at the LBMA. Now, the rules of the game, okay, is gradually being turned in China's favor. So, likely scenario, the renminbi will be kept in Saudi Arabia and UAE and used to offset Chinese goods import and infrastructure works, rather than they needing to convert it into gold, because there's really no need to, okay? The thing is that the renminbi will be trusted because it is de facto backed by gold. But having said that, the renminbi then will be kept, okay, in the country, and then they can use it to pay for Chinese goods, services, and infrastructure. And likewise, China could also pay the oil in Saudi Arabia rial after swapping them from renminbi, and Saudi Arabia gets to keep the renminbi to pay for Chinese goods import and infrastructure works. The same applies for the Arab Emirates dirham. Now, this will keep the US dollar out of the exchange for oil, goods, and services between the participating countries. So this is how they intensify the dedollarization progress. Now, the other thing is RMB loans. Now, it is rumored that China is offering US dollar loans to nations to pay off their own US dollar denominated debt. Now, these nations subsequently settle their US denominated debt, but will repay the Chinese loans in renminbi. These nations will sell their resources in renminbi, which is used to set off against the loan. Now, this is another step by China to bypass the USD in the resources trade, while helping nations to get off the US dollar. The internationalization of the renminbi is a work in progress. Now, I think Evelyn talked a bit about military conflict, and today there is wider expansion in the conflict zone in the Middle East as Houthis launch attacks against Israel commercial ships. US bases in Iraq and Syria continue to endure sustained attacks from militants, and the US has replied with bombing attacks. In the South China Sea, the Philippines has ramped up its sea patrol, sometimes in collaboration with foreign navies. Uprising in Mali and skirmishes in the Venezuela and Guyana border, which put Brazil on a watch. Ukraine's counter-offensive is proving to be a disaster for NATO and US, and thus a need to shift focus to the Middle East to deflate the embarrassment. So you can see that, they say that there's limited amount of money they can send to Ukraine, and they now advise Ukraine to cede territories to Russia so that they can actually come to a peaceful agreement. But I doubt Russia would want that because it is to their advantage unless Ukraine have more to give or NATO have more to offer. I don't believe Russia will take the bait. So back to you.
The 2024 Astrology and Global Trends membership is still ongoing. We hope that our members from 2023 will continue to support us in 2024. The membership price is 128. After discounting the book price, you have to buy the book from an online platform, and then the book is about 40 ringgit and you discount it off. Actually, the membership is 168. So we discount off the 40 ringgit. The total will be 128 per year. Okay. I will drop the link to join in the in our chat group, Telegram chat group as well. And also, I will also send the email out for the link to join. And to entice our members, let me just go to the full screen. To join, we have put in several things. For existing members that renew by December 20th, and for our current 2024 members that has joined, you will get a guide on a potential sector, investment sector that align to your energy. Okay, I've already blasted out to our 2024 members. So I hope that those 2023 members will look into this, and I will give a guide where means that which sector that is aligned to your own birth chart, life energy, that you can see the opportunity clearly. Because we have given a lot of tips throughout 2023. And we really hope that every member has taken the tips. For example, uranium. We have talked about uranium. So this one, but sometimes we also have to look at, the sector that align to our life energy, that we can see the opportunity better. Okay, because there are some sectors that is aligned to us, aligned to our frequency, and then we will know that, this is the time to buy. It's also, investment is also more about intuition. If you ask the traders also will tell you that this also depends on intuition. The way that you read the chart is very important. This is number one of the value we will give to our members who renew. And also another one is that I will drop all the monthly power date to improve your own energy field, and also investment intuition in a Telegram channel monthly. That means there are certain dates, certain months, certain times where, you can manifest to align to the frequency of the energy of that moment to enhance your own energy, that, it will improve your investors' intuition. Don't you like that? A good sort of enhancement because I realize that most of our members here are investors, and sometimes we will need a little bit of investor intuition that, to help us in our investment as well. Okay. So by December 20th, okay, for all, this is for the 2023 members. The 2024 members will get all this drop in the Telegram channel. It will not be presented in this platform. Okay. Yeah. And then in our 2024 special member talks, for every year we will do one talk just to focus on what the year will be for 2024, and we have done in 2023. So this one will be, I think, about January timeframe, January or latest by February early. So we will look a little bit into Qimen chart, because I saw a lot of members that has some background on Qimen. And we will also talk a bit about potential profitable investment using some of the Chinese astrology research. And I will teach you how to install your investor's intuition into you. And the next questions that we will answer is that, will there be a market crash in 2024? These contents were all in the 2024 astrology talks, and we hope that the 2023 members could continue their journey with us to get all this content. Okay. Yeah. So we will do a summary. As stated, that there will be continuous conflict in different parts of the world. Focus in the East now. I'm starting. Like I think Philippines, escalation of corporate layoff. It will be even worse, and inflation driven by food prices and new tech innovation continues to charge, continues to escalate at a rapid speed. Okay, so over to you, PC, to do the wrap up for the global trends research section.
Yeah, so as I mentioned, there'll be wide conflict zones which are now being identified in other small pockets of the world. And corporate bankruptcies have resulted in many layoffs, but we could see this being extended in the finance industry. Probably, I think we will see more layoffs from the finance side from December onwards, because November was the kickstart. Okay, Citi laid off 7,000. And I believe those major banks, if Citi is laying off 7,000, I believe the major banks would soon be doing similar. And if, let's say, UBS has found a private buyer, and I think, another layoff is in the cards. So this time you'll see more breakage in the financial sector. And of course, food inflation remains sticky in many economies due to the imbalances in supply. And US technology innovation will focus on software and design, while China will focus on technology innovation in manufacturing. New operating systems coming out of China could alter the dependence on US OS operating system. So I think more Chinese companies would want to seek independence, and this could spell trouble, okay, for a lot of the US companies. Well, that's the summary.
Okay, so I think that's it. Any questions from the floor that we would like to take? Anyone has any questions?
Evelyn, I just want to share, just want to ask here, is coal energy considered chemical energy?
Yes.
Is considered, yeah?
Yes.
Okay. Yeah. So for those who actually keep track of coal, there are actually a lot of the coal stocks are being beaten because of the drop in the price of coal from a record high. It's down by about, I think, 50%. So a lot of coal companies that are actually in the energy sector have seen their stock plunging 30 to 50%. But if you believe in the coal business, especially in China, in China, they are actually building record number of coal firing plants. Okay, even though they are working towards net carbon zero, and that is how they supplement the clean energy with the expansion in coal energy by building even more nuclear plants, as well as solar solar farms and wind farms. Now, if you are investing in China's clean energy, I urge that you focus only on nuclear, and perhaps you can put some attention to the coal mining companies, because some of them are actually paying double-digit dividend. And by double-digit, I don't mean 10%, okay? It is, some are closer to 20 to 30%. So you just need to do more intense research, okay? And you'll find some gems there. Because China is expanding their coal firing plants, so there'll be more demand from coal, okay, for coal. Just feedback.
Okay, yeah, we have two questions from Qing Yi. Her question is a she, maybe it's a she, yeah. Year-end December will be bullish or bearish? Okay, as we state that there are potentially there will be, a drop in the stock market in December. It looks like it from the energy standpoint. And I think the second question, lithium batteries, any hope to rebound? I don't really understand why she says that lithium batteries, any hope to rebound. I thought that, lithium battery has been very it has been on demand all this while.
Yeah, I think I can answer that.
Ah,
First and foremost, a lot of the companies that produces lithium has seen their stocks fall around 30 to 40% versus during the peak of the lithium price. And the lithium price have actually fallen in tandem, in particular because of the demand surge in lithium. A lot of the companies are starting production. So it's like going to be another crowded industry. So that's why there are the newer batteries, because we all know that lithium can be very volatile in exciting the electrons. So some are actually reducing, coming up with batteries that actually has lesser quantity of lithium as well as cobalt. So there are, if you are investing in lithium, then I think you need to have a longer perspective, because ultimately there will still not be enough lithium to power the entire electrification of the whole transportation system. Only thing is that during the medium to maybe medium term, there could be, lithium stocks could be affected, because there's a lot of companies that are, entering into the development stage. If you track back the lithium the lithium price chart, you can see that lithium has actually declined almost by 50%. Yeah, so that replies your question, why despite there's a lot of demand for EVs, but then lithium has still not moved up. Okay, hope that answers that.
yeah, I think because definitely we still need lithium in the battery chemistry, because lithium is the one that really can give electrons almost instantly. And although they subsidize with other substances, I think lithium cannot for the time being. I have not seen any chemicals in the periodic table. Okay, I'm talking chemistry here, not astrology. That can replace the lithium's chemical properties, although there will be maybe the mix of the electrodes mixing of the cathodes material, they will try to lessen the lithium. However, I don't think there will be total independence for lithium in terms of short term, judging from what I know of lithium batteries. I work with lithium batteries for over 10 years.
Yeah, and I think that even though a lot of people are talking about solid state batteries, even iron solid state, or even sodium solid state battery. But even in sodium solid state, they have done a research whereby it has still not been able to deliver the kind of power that lithium-based batteries have delivered. So that is why even the sodium ion batteries, they are putting in some lithium to able to range the mileage that are specifically right now in very lithium concentrated batteries.
Yeah. Actually, consumer is very funny. Last time when we do lithium battery that time, they want something, fast. They want some big power, and yet they don't want to take the risk because every battery is like a time bomb with so much energy concentrated inside. You know how people get more, more power in a lithium battery? One, they squeeze more material. Second is that, they change the chemical composition to be even, to react even faster.
Yeah, and I think that eventually it will pave way for more use of graphene in the cathode and anodes as a something that will help to deliver efficiency, because graphene is still one of those that is still under experiment.
Yeah, because we wanted to find material that could less damage the structure after each charge and discharge. That's why the more you discharge, the more you charge up your battery, the structural damage will be there. That's why the battery has also deteriorated over time. If you use handphone for many years, you will have known that. Okay,
and also another thing is that China is starting to experiment on short duration shipping using lithium batteries.
Okay. Yeah. Yeah. Another question from Qingyi also. Can we buy China core company that pay double-digit dividend in KLSE? Yeah, I will
No,
leave it.
no. You will need to open a foreign trading account. Then normally for dividend stocks, there are only two places that I like best. One is Singapore and the other is Hong Kong, because there's no withholding tax. Okay, those coal mining companies are actually found on the Hong Kong Stock Exchange, and they actually pay very, very good dividend because their share price have collapsed. One of the company even have a PE of 2. Can you imagine that? And another one have PE of 5. Okay, so this has the damage from the coal industry has reverberated across the stocks, but then they still continue to generate profit. Okay, their profit is still better than the years before 2020. So that means the dividend pay is still good. So if you are interested, I would urge you to open a foreign trading platform. If you are with any local banks, you can go to the investment bank and then set up a foreign trading account. Then you can start trading already.
Yeah. Nowadays it's actually very easy only. It's all online.
Yeah.
Okay.
Yeah.
Yeah.
Some of our members who actually bought the oil company in China, I think they they are quite pleased with the dividend. Okay, at that time when we suggested it, the stock was around, I think, about 11 Hong Kong dollars. Right now it has paid a good dividend of 59 cents and is now trading at about $13.
Yeah. If all the members has catch all the cues, I think what you have paid that 90 ringgit of membership, even 128 ringgit of membership, you have recovered many, many, many times, even tens to hundreds of times. Yeah. So that's why I feel that even the intuition is also very important for you as well. No matter which platform you are in, even you buy a trading course nowadays cost you thousands of ringgits, and it might not yield you, the returns that you want as well. I know that. So I think 128 ringgits is nothing. It's really nothing.
Yeah, for those who actually, not say doing stock trading or buy or investing in stocks, for those who actually bought gold when gold was in the 1800, okay, right now it's already 200 over. I mean 2000 over, you know.
Yeah.
And gold right now has reached new record highs in terms of yen, in terms of Aussie dollar, in terms of Canada dollar, and in terms of euro. So the US dollar will be the last dirty bag in the laundry. Okay. So eventually we will see much higher price in terms of gold for the when in US dollar. So sometimes when you look at people like to say that, oh, I bought gold at 1900, then it fell into 1800, then I lost in terms of US dollar. Not necessarily that you lose a lot, because when you convert how the gold price has fallen in tandem with a rising US dollar, so if you convert it to the local currency, you might not see such a depressed price in local currencies. So sometimes it's a matter of relativity.
Yeah. And also in September, we talk about gold, right? Everyone forecasts that it will go up, and we are the one that forecasts that it goes down. So some of the members also take that cue and also, buy into it. So of course, we cannot exactly tell you that when, and all these things. You have to make a judgment. Even you sign up for tens and thousands of investment costs, nobody is going to tell you that. Even, there's one very famous, start with B1, the investment cost. Even the instructor also will not tell you when to go in, when to go out. You yourself has to take that cue yourself, and then, to go in and to go out. That's why this is where the intuition also comes in that parts. Okay.
Yeah. So for those who are attending, okay, do explore the Hong Kong Stock Exchange coal miners. I'm sure you'll be able to find some gems there. Any other questions?
Any other questions? Okay, if no, let's end tonight. We hope to see most of our 2023 members in 2024. And if you decided some reason or other that you do not want to renew, we will still hope that you will continue to support our work here. So thank you very much for the support of the 2023 members to our work. And we really hope to see you in the future as well.
Yeah.
Any
Thank you for
last?
logging in, and have a very pleasant evening ahead.
Yeah.
Bye
Okay.
bye.
Okay. Bye bye.